Oh yeah, I updated a bunch of the functionality on Godel, so it's kind of neat. I don't know if you could see my screen, but yeah, if you wanted to like look rapid fire at every stock and see where it's at, you can kind of do that like this. Okay, where's Microsoft? All right, I got my Microsoft. Where's my Google? What else? Oh, let me look at some biotech. Where's my favorite stock, 𝗕𝗲𝗓𝗔𝗔? Oh yeah, what's up with that stock Summit? TARS, any stock you would, could look at. IBM, you mentioned Viking. This actually reminds me of my old terminal back in 2000, where it's hard to like rapidly check each stock very quickly. I don't know about Summit. It's like this highly volatile stock. A lot of people think that because of one Chinese study, we're going to see PD-1 VEGF bispecifics take over. The problem is it's very easy to make a VEGF bispecific, a PD-1 VEGF bispecific. Every single drug company will have one in the clinic next year. And drug companies like Merck can start 25 clinical trials, whereas a company like Summit may not be able to. Now, Summit could do a deal with Johnson & Johnson or something like that. They did do a deal with, when they were pharmacyclics, they did a deal with J&J, and they got bought out by AbbVie. So it's certainly possible that AbbVie or J&J go to Summit and say, look, we want to pay $1 billion, and this is what we want to do, and we'll co-market this drug or whatever it is. And I think that your average company is going to say, can we just make it ourselves? That's going to be an option. Cassava will be dead by the end of the year or in January. I think it's going to be closer to the end of the year, but you can never guess with these things. What's important is that it's going to go to zero, which I'm so sure. And at some point, I'll put my thoughts together in a long form, kind of like piece of some document of some kind. But for now, I haven't looked at Adobe in a while. Another Indian CEO. These Cassava bulls are so stupid. It's so obvious they're all brand new to the stock market. And they're just like praying and hoping that they make a huge return. There's no such thing as a 4-year cycle. That's an imaginary thing Bitcoin people made up to try to I don't even know, it sounds so stupid. I don't know if you guys know this, but I'm a pro, all right? So when I hear noobs doing noob stuff, I hate that. Within one trial, assuming there's no fraud, you did have within one trial, the Summit drug vastly outperformed the other group. And so you kind of have to respect that within one trial, it did happen. No matter what other trials show, right? You did see that. So why would we doubt that the benefit's there? That's one way to look at it. Another way to look at it is, remember Opdivo was outfoxed by Pembro, which was 1.5 years later, right? So don't assume Summit will win this race. No, the idea, as you may know, is that the one arm of the VEGF is bound to the cell because the PD-1 arm is bound to the cell. That's the theory. I'm not sure in practice that actually happens. And I don't know that it matters. The theory is you're not going to hit the vasculature, you're not going to get the side effects of the VEGF freely circulating antibody. But I think the bispecific is freely circulating too. And that's just kind of a theory. It's their theory, but I don't think it makes sense. But the other question then becomes, how do you explain the results? China's come a long way. It's not the same place it was 10 years ago or 20 years ago. So I don't know. I feel like you don't have to trade every stock. That's the trade and invest when you have an edge. Get comfortable saying, look, I don't have to be in this one. Why do I have to be in this one? Because everyone else is in it? I don't know that the it's China thing is the thing anymore. I do think you get some very amorphous benefit from having it in one agent. Of course, Roche had this big incentive to get Avastin as standard of care. Avastin never added very much in lung. Yeah, what happened with the comparator arm is the question. And again, flukes do happen. And if you look at the censoring of each, there's a whole bolus of patients. That data is not mature. That data can mature and look pretty ugly. Tesla versus NVIDIA for the next 5 years. I don't know. I like both of them, but they're not like my favorite stocks. I think they'll both do well. And again, the next 5 years, it's tricky because you can have recessions and market downdrafts for 10 years. We just haven't seen them lately, so we're all kind of, used to gains when it's very easy to see profound losses for a long time. That's why I like to advocate and teach about short selling. People think there's something wrong with short selling or there's something unethical about it. Listen, where I'm from, you gotta protect your neck. It's survival at all times. You can cry about ethics and portfolio and what's fair and what's not fair later. Get this money first. Rule number 1, just make money. Rule number 2, never forget rule number 1. And if you got a problem with that, you shouldn't be investing. I think Tesla is a bet on Musk doing something innovative, and I think that's probably, I wouldn't bet against the guy. Seems like he's pretty good. Amazing growth for Adobe, man. It's an amazing company. They always always find a way to win. It's like really just well managed. So this guidance was disappointing. Maybe it's just conservative. Just getting my ducks in a row here on Adobe real quick. Sucks I haven't looked at it in so long. It's such an important company. Yeah, I do see the RPOs slowing down quite a bit there. Right, so Adobe's definitely have to drill down on that guidance. But my dad, who passed away, he'd always say, and he passed away about a year ago, almost to the day. But he's gone 1 year now. But he, whenever I tell Nibbles to shut up or you're stupid kitty, he would message me and say, "Don't say that. She's not stupid. She's very smart." What do you notice about Adobe? Look deeply into the numbers. No, look deeper. Feel the numbers. Let them speak to you. Breathe in the numbers to truly understand them. Look at the difference between RPO and revenue. Should we graph it? This is RPO. I mean, RPO should be a leading indicator for revenue, right? So what's the guidance? 𝗕𝗏𝗡𝗦 is the president of digital media. Yeah, I'm not sure I did great research on Summit. It's very, let's see what's going on in the market actually. Yeah, I'm telling you guys, this Cassava is a zero. Every dollar it's above zero is free money. Listen, kitty, get the hell out of here. Good on. So on Godel, if you type in focus, you get this little thing and you can do whatever you want with it. Put it on big screen TV and just watch like an idiot all day. Okay, so it's up with dead cat bounce. Let's look really quick. Immuneering. So this is M104 with gem and what are they called? Paclitaxel again. Is that Abraxane? 2 out of 5 response rate. Is that really? Come on. If I have patience, dogs. I don't think this is gonna. How does this drug allegedly work? Pan-RAS inhibitor? Yeah, I don't know about this one. Right, exactly. Berkshire has taken a position in Cassava Sciences. Our first ever biotech investment. We could not resist all the fraud and it was just too attractive. After consulting with Matt, yeah, I saw there are a lot of rumors about the failed IPO too. Yeah, Byron, that's the puzzle. That is the puzzle of finance. What discount rate to use? That is literally the puzzle. That is what almost all finance boils down to. What does that mean? Discount rate is one of these things where we just don't know how are we thinking about the risk of a company. Let me show you a quick thing. I got Bloomberg on the other screen. I don't want to show you the evil empire software that we're making a much better version of, but let me show you just this one thing. This is the historical return histogram on Bloomberg. Very few people use this function. I actually updated this function about 15 years ago with my messages to Bloomberg. I am banned from Bloomberg. But the thing about Shkreli is Shkreli finds ways around bans, all right? You can't ban the snowman. Can't ban the snowman? Oh, Bloomberg does not like me for a number of reasons. One is I'm trying to compete with them. So the question is, what is beta? Why do we care about beta? Why do we discount cash flows in the first place? All of these questions are really important. We're worrying about risk, right? We're worrying about risk to our cash flows. Here's another function on Bloomberg. I think it's a little newer, called equity risk premium. And the risk-free rate is here, right? I think this is corporate bonds, and then this is the equity risk premium. The beta is the interesting thing here. Do we want to use beta to represent risk? Does that make any sense to you? It doesn't make a lot of sense to me. So like to me, the beta of Adobe, which is kind of like the beta is high beta. Here's, I guess this is versus the other S&P constituents. Yeah, pretty sure. Or are these daily changes? Let's see. Okay, no, these are the price movements. This is the one change distribution, percentage changes. So R squared is correlation. Here's low correlation. I'm not sure that beta is the best measurement for risk. I mean, most people don't think it is either, right? This is 52 weeks, it looks like, right? Weekly return. And yeah, so beta is volatility, but it's also, and it's supposed to represent risk, and we use it in Black-Scholes, we use it in equity risk premium. It shows up all over finance. And, you know, it basically tries to measure how, if the market's up, how much more or less will the stock be up. But the way I think about cash flows is very different. And I think the way Buffett thinks about it is very different. It's really about, like, what is the risk that I'm going to get this or not? It has nothing to do with the stock price, right? You don't use beta in Black-Scholes? Well, you use them in implied vol, right? Maybe we used a different, sort of the same thing in a lot of ways. Maybe we used a different, like, barrier option valuation model, but you can use Black-Scholes too. So yeah, I think the risk to the actual cash flows is what matters. And some companies have different risks. Like the risk to Adobe is the risk of growth more than it is the risk of downside likelihood. And that's a lot like hedge funds. In hedge funds, the downside vol matters way more than the upside vol. You want asymmetric volatility, right? So you can actually be very high beta and not have downside vol, which is kind of crazy if you think about it. So to me, we were looking at corporate bonds yesterday. I think Adobe is super safe. And we can actually see where their debt trades. Let's see, they don't have too much debt, but let's take a look. They have 2034 bonds. They priced them at 5% a while back. They're trading at 4.3. So the bond is trading at 4.3. Why would we expect to get 7% out of the equity? Shouldn't we expect to get less than that? The bonds, the risk of defaulting in the bond is so low. Now the equity is, of course, priced a little differently. And one of the things we have to do is just adjust our valuation for different businesses. Like, so if I take the discount rate here, right, and I want to compare it to, well, what are we discounting our Microsoft cash flows by? Let's take a look. 7% as well. Well, Microsoft has a lower discount rate than Adobe, right? Microsoft's a bigger business, it's more diverse. It's really, the risks to its cash flow are very different. So I can't really in good faith say Microsoft should be at 7 and Adobe should be at 7. Adobe should be maybe at 8 if that's the case. Changing the wrong one. And if that's the case, it looks a little overvalued if the growth slows to 7% and then in terminal 1%. It's a bit overvalued. We got to double check cash flow because I think their cash flow is a little higher than this. So maybe it might be that, like, maybe this represents it a little bit better. But either way, it's not massively different. Adobe has this issue where like they have these big brands that have been around for a long time, but they're kind of tired. And that's why the Figma acquisition was going to be really good for them. And, you know, the FTC or whatever blocked the Figma deal. So they've grown so much in that one area, creative software apps. Seems like it's really hard for them to find a new avenue. Now, that's been the story for a long time. And they've just kept growing and growing and growing. And I think content is one of these things that there is this really big appetite for content. And it only continues with the way the internet and the way kind of the world is going. Yeah, Adobe doesn't look particularly attractive. I will say that their generative, I mean, I know the AI space, I mean, their generative plans and their generative stuff kind of sucks. And I do see them like spending too much to buy some like, you know, I don't know, buy Midjourney or something like that. Spend $40 billion to buy Midjourney or something. All right, so let's see. If they grow revenue by 10% a year, I mean, you basically are, yeah, it takes a lot to see upside in Adobe. It sort of have to like grow forever. I don't like this stock at all. It's a great company, don't get me wrong, great management. And I'm sure they'll steer their way out of it, but the assumptions are somewhat heroic. Now, I didn't do this part, which I should do. Because all that cash does pile up. If they're gonna hate, let them hate. Just let the money pile up. A wise philosopher once said that. 2% a day. There's a guy in our Discord. What's up, Ken? There's a guy in our Discord who says he makes 2% a day. He's pretty lit. Every day, including weekends. Quintillionaire. Oh, you don't have a quintillion yet? Oh, you broke. Discord.gg/Martin Shkreli. Don't fall for the scam. Don't fall for the scam. Anybody promising you 2% a day is lying to you and trying to steal your money. Anyone promised you 1% a day is doing the same. So if you think a software company is like zero risk to the cash flows disappearing, I think you could discount as low as close to risk-free rate. Because at the end of the day, what matters is the realized risk. All this stuff is imaginary. It's kind of like math. In math, you play with these different objects that are just made in your mind. They're not real. You can't touch a manifold or, you know, cut the real numbers with a scissor. They're just imaginary. Discount rate is the same. We're discounting next year's cash flow and the year after. But when that time comes, you know, basically you either get the money or you don't. Yeah, I have a bit of a nervous energy. I mean, one of my favorite techniques is, as you guys can see, you set the NPV, solve for the market cap right now, and say, okay, this is what would have to happen. They would have to grow 10% until 2030, and then grow cash flow 1%. So they're growing revenue 10% to be clear, and then grow earnings 1% forever thereafter. They have to return 3% on their money, and at 8% discount rate, that's the current NPV. Is that cheap or not? Will they beat that or not? That doesn't sound that far from, that doesn't sound conservative. I mean, to go up 10% every year for the next 6 years, not easy. We don't know that they'll do that. And then the 1% at maturity, I don't know what'll happen there, but you know, some people are saying there's the software, we're going to see the end of the software industry and stuff like that. So even if they just grow a small amount, the stock gets cut in half. And obviously it's not clear that they can grow 20% ever again. That's the only way you can double your money. It's pretty good pass, or even maybe a short. But again, management's really good, and that's kind of the X factor in every stock. And you can sort of quantify that with these ratios. You can say, well, maybe the growth's not going to be great, but I really believe in management. Management's going to make really good investments. So the return on their capital that they invest is going to be 20%. You know, they're going to make great acquisitions. Then the core business doesn't have to grow. The new deals take care of itself. So you really have to sense management and say, okay, I think I think management's really good. That's why I put these, and I want to compare them against other companies. So if I say the ROIC for Adobe is 3%, but Microsoft is 6%, I think Microsoft's going to earn 6% on its money because Microsoft does great deals like Activision, or they make great investments. Most of these S&P 500 companies, they're not, in fact, most companies in general in corporate America, they're not going for broke with their balance sheet. They're very conservative. Yeah, but there are definitely changes afoot in the creative space. Midjourney is a good example. And Adobe's like the low-hanging fruit, like PyTorch is very natively like adjusts photos, where you can represent photos and tensors very easily, whereas things like CAD are a little different. There's affinity, you said. Yeah, current bond rates are a good example, but the most important thing on discount rates is comparing them to other companies in the industry. So if you set your Adobe discount rate to 8 and you have your Microsoft discount rate at 7, you have to adjust to see, okay, is Adobe a little more risky than Microsoft, or is it more deserve a 9 or a 10? So it doesn't actually matter what the percentage is. The differential is what matters.